What's going on YouTube? This is your boy Jeremy Frazier back at it again with another video. And today I want to simply discuss the topic at hand, and that is long-term investing. And one of the reasons why I want to talk about this right now in particular is because the economy is very interesting, right? We're dealing with inflation that is so high right now that most of us are feeling it. And it's easily seen when you're going to the grocery store to buy some eggs, right? Those eggs are out of control with the price right now. So investing is your best ally, your best soldier against inflation. Because basically, with inflation right now, if you're leaving your money sitting in a bank account, especially if it's just a checking, you are losing value on your money every single day. Now, right now, we can probably get a savings rate up to about 3.5%. The inflation rate is 6.4, which means you're still losing money on your dollar. That doesn't mean $1 doesn't equal $1. What that basically means is the price of goods and services are increasing. So even though your dollar value didn't change, everything else did. So your money doesn't go as long. So that $100,000 salary you have feels like an $80K salary right now. And the only way to help mitigate that is to invest. And for me in particular, I'm a long-term investor. So these 5 tips will be easy for you to follow so you can start long-term investing right now so that you can help combat inflation in the long run, right? You want at minimum to be making more returns in your investments than the inflation rate. If you do that, at least you're not losing money, right? So the first tip, right, is diversify your portfolio. This basically means don't put all your eggs in one basket. There's so many different type of investments, right? You have to pick what you want to invest in. You can invest in the real estate market. You can invest in single stocks. You can invest in ETF and mutual funds. You can invest in all different type of things, right? It's better to spread the wealth because when one sector is down, another sector will probably be up. So make sure you diversify. The second tip is buy low, sell high, right? Always look at the market trend with whatever you're investing in. If I go to buy Apple and I seen the 52-week high was $200 a share and today it's $190 a share, I'm not going to buy Apple right now because it's $10 off from the 1-year high. I'm going to wait until Apple goes down a little bit, maybe about 150, 140 range, where at least I'm not getting in at its peak. Because guess what? What goes up must come down. So always do your best to seize the opportunities when the market is down and get some of those stocks or investments you like while it's cheaper. Tip number 3, stay disciplined. This is so extremely hard, especially when the economy is all shaky and rough, right? Your instincts is to get away from your strategy. It's so important that when you have a plan, you take the action and you stick to it, right? You don't want to get fearful of the market going up or down and all around, right? If your plan is each year you're going to invest X amount of dollars, stick to it. Understand, are you doing dollar cost average? Are you looking at technical analysis? Are you paying attention to the news? As long as you do the things you need to do to protect yourself, you'll be able to stay disciplined, right? Don't stop. Don't stop. Tip number 4, make sure you look at it in the long run. And this is so hard. A lot of us want money right now. But why? Right? Having money grow over time and allowing that compound interest to at least let it grow and grow and grow until it's this monstrous amount of money that you can deploy for whatever you want is so much better than getting the money and then immediately using it for something that's going to lose value, right? So when you look at it in the long run, when you're in a situation like today where the market's a little shaky, you're like, I don't care because in the next 3 to 5 years, the market's going to go back up. I'm not worried about it right now. I'm worried about it in the long run. So just make sure long-term investment means long-term investment, right? It's as simple, straightforward as that. It's not about the day-to-day, week-to-week, month-to-month. It's about the year over year. Okay? The fifth and final tip I'm going to give you is know your risk tolerance. This is so extremely important. Don't cry over spilt milk, right? If you know how much money you're willing to lose, you're not going to beat yourself up if you lost some money, right? It's like when you go to the casino and you know that if you bring $500 and you lose all that $500, you're not spending any more. Take that same outlook with investing, right? Take a percentage of money that you're willing to lose all of it with and invest it. And I'm telling you, 9 times out of 10, you're not going to lose all your money. Because just as quickly as you go buy that Apple phone, use that Microsoft product, buy that Starbucks coffee, why not get some equity in that company, right? You're willing to take the risk with their products and services, so why wouldn't you take the risk with investing in those companies, right? But at the end of the day, set aside that money that you're willing to risk, invest it, and if you lose it all, at least you know it was the amount of money you allocated to lose. With that being said, those are 5 tips to help you with long-term investing. I highly suggest for my beginners, start with stock investing, right? It's so simple. There's so many things out there. For my beginners, you can use a Robinhood, you can use a Stash, you can use a Webull. For my experts and intermediate investors, you got your Fidelity, you got Tastyworks, you got TradeStation, and you got so many other platforms that exist. Stop waiting, right? Take a little bit of money you're willing to risk. Open up one of those accounts under one of those names and start putting money in it. It's gonna make money. Just take the risk and you'll see it was well worth it. With that being said, man, until next time, peace.
Put that work in. 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 They got to catch up, cause I'm too fast like Usain. Don't put me in no one-on-one, get cooked up. Well done. Came about that low pond, but now I'm swimming with